Here we have the 4-hour price chart for NIO Incorporated, stock ticker NIO. Here we can see that the stock is making an attempt to stabilize after a period of long-term downside. We can see that the stock itself was trading at values above $16 per share not so long ago. I mean, this would really be August 2023. So we're talking not even a full year ago. Share prices were trading much higher relative to the current market valuation. So when I'm looking at this stock, one of the things that I think about is the potential for downside versus the potential for upside. So now that we've seen all of these declines, what we really have to be focused on here is whether or not these declines are sustainable, or whether or not a bounce kind of needs to take place in order for the stock to move back toward its longer term averages. Reversion to the mean is very important in the stock market. It's possibly the most important thing in the stock market. I mean, it's like a period of a point of equilibrium. The moving average itself. I mean, the share price generally for most assets, even cryptocurrencies and everything like that, does tend to revert toward the mean. Does tend to kind of move back toward its longer term moving averages. So here we can see that the share price has declined rapidly for a very long time, and the potential for upside here does far outweigh the downside. So if we're going to look at this stock in terms of whether or not it's a buy or a sell, we do need to kind of look at the more near term price action. Because if we're going to be taking a trade, the near term price action is probably what matters most. This is going to determine whether or not a true reversal is possible, and whether or not the trade is likely to start encountering losses, kind of immediately after we place it. So here, I just want to point to a couple of factors here. One, I do think that we're kind of trading within an ultimate trading range here. I think that we've kind of defined current trading valuations as meeting resistance at just above $6 per share, roughly 605, and then to the downside, we have a lower trading range coming in at roughly 360. So roughly 360 on the downside and then 605 on the top side. So we're talking about less than $3 total dollars here. It's a relatively tight trading range. And when you see scenarios like this, tight trading ranges tend to encounter forceful moves once they're broken in one direction or the other. The range itself doesn't tell us which direction the break will occur. But once the break does occur, that's how we know that prices are likely to start to extend for with a great amount of follow through. So what we're doing here is what we're trying to assess here is the potential for follow through on the downside versus the potential for follow through on the top side. So if we were to break through 360, there wouldn't be much room for share prices to extend to the downside. I mean, we're talking roughly $3.50, and we're going to be trading at zero relatively soon. And that's roughly equal to the size of this price range. So it's fairly constricted. However, to the top side, the potential for gains is much more significant. So if the textbook knowledge here, when you see a trading range like this, is that a forceful break is likely to occur. But, in my view, there's really not much room for the downside for a forceful break to occur. So in that sense, it really doesn't make a lot of sense that we would see a major break to the downside, because there's not much room for follow through there. The room for follow through is toward the top side. Okay, so in addition to that, we do have the readings in the current momentum indicator. This is a 4-hour chart, which is an intermediate chart. So it's much more valid or stronger, or more forceful in its readings when compared to something like the 15-minute chart. So here we can see that the broader trend here is positive. This line here is sloping higher. This purple line here is the relative strength index. It's a reading of momentum in the market. It's sloping upward. It's a little bit hard to see because it looks kind of flat here, but it is sloping upward. And then in addition to that, we can see that the prior downtrend in momentum, which was shorter term in nature, you can see that it's just a shorter line. The shorter term time frame here, the momentum that characterized that time frame, that trend has broken. As we can see here, the relative strength index, that's the purple line, has broken above this trend line. So it's completed that downward trend momentum. And then in addition to that, it's broken above its own moving average. So I'll just try to explain that quickly here. The purple line here is the relative strength index. The yellow line is the moving average of the relative strength index. So when the purple line crosses above the yellow line, that's a bullish signal. It shows that the relative strength index is breaking above its own moving average. And then that alone is a bullish signal. So if we're just looking at the indicator reading here, we've got three separate reasons to believe that the next trend for the stock will be characterized by positive momentum. Okay, so if we combine that with the fact that the potential for downside here is very limited, and the possibility for large amounts of momentum to kind of generate to the downside, it doesn't make a lot of sense because how much momentum can be generated in $3? It's really not much momentum that could possibly be generated in that direction. It just doesn't really stand a reason that share prices would be able to fall much lower. In addition to that, the most recent price movements here, we can see that the trading volumes, we have started to see some upside spikes in buying activity here. So this is occurring at lower levels. So it's not totally surprising, given the fact that the stock is really on sale at this point. Um, it's a very cheap stock, so it's not surprising to see, that there are some people that are trying to move into the market and trying to capitalize on this strong potential for upside. I mean, this is a very large arrow here. Um, it looks kind of ridiculous maybe on this chart, but this is the reality of the situation. I mean, it just points to, the prior highs from last August. I mean, we're not even talking about ancient history here. This is a relatively short period of time. So, what this does suggest here is that, buyers are seeing this as a good value at current levels. And then we can see that the underlying momentum here is building in the positive direction. At a point where there really isn't much room to extend to the downside. So, in my view, all these things kind of favor, looking at the stock from the bullish perspective. In addition to that, if we look at different periods of these moving averages, we can see that the slope of these moving averages was much stronger to the downside, more forceful, like especially right here. Um, we can see that share price, the moving average of the share prices was moving lower in a much more forceful direction. But here we've started to kind of flatten out. When we compare things to the historical perspective here, we are starting to kind of flatten out here, and this does suggest that a base is currently forming near current levels. So when we take all of these factors together, there's a lot more evidence supporting the downside. Supporting the upside than is supporting the downside. There really aren't many arguments for continued downside. I mean, it does look like we're currently forming a base somewhere near current price levels. Currently, we're trading at roughly $4.60 per share. So this is the current market analysis for NIO Incorporated, stock ticker NIO.